Hello, traders. It's 8:01 a.m. Chicago time on Thursday, the 20th of April, 2023. This is episode number 2453. Thanks for joining me. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So let's take a look at my camera here. I don't know where my camera went. Let's take a look at where we are currently. The market is in a risk-off posture. We're down across the board. Market's just selling this morning. S&P down 30 points. The Dow down 179. NASDAQ 122. The Russell down 16. And this follows yesterday's buying. The crude is the interesting one. Crude has fallen through the gap and is filling just like we had discussed yesterday, and it's off by 1.74%. What's happened here in the markets in terms of economic releases? We're looking at several major releases this morning. We had AT&T, Taiwan Semiconductor, American Express, Volvo, and others, Nucor, Philip Morris, AutoNation, D.R. Horton, Nokia, yada, 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 yada. Everybody can get access to a calendar of releases. AT&T was mostly in line. It came in at 60 cents, was expected at 58. Taiwan Semiconductor, which is one that's closely watched, beat by 9%, came in at $1.31 versus $1.20 on $16.7 billion. American Express missed by about 9.4%. Nucor beat by 16%. Philip Morris, mostly in line, beat by 3%. AutoNation beat by 5%. D.R. Horton beat by 41%. And then Nokia missed by 20%. Truist Financial missed by 4%. Union Pacific missed by 2%. Anyway, just, search online. You'll be able to find those. After the close, we've got PPG, CSX, WR Berkeley, and Seagate. Again, earnings continue to be in focus right now, and we should be attentive to how these come out and how those sectors move as a result of the big players within that sector. Philly Fed this morning came in lower. Philly Fed came in at negative 31.3 versus negative 19.2, so it's quite a miss. The prior was 23.2, negative 23.2, so the forecast was an improvement. What we got is much worse in the Philly Fed Manufacturing Index. Prices paid jumped 8%, 8.2%. The expectation was 28, and new orders came in at negative 22.7, slightly better than the prior of negative 28.2. We got jobless claims this morning, 239.75 thousand. We were expecting 239 and a quarter. Continuing claims came in at 1865,000, 1.865 million, which was higher than the 1.82 million expected. And then looking ahead, we have ECB's VSCO. We have the consumer confidence number out of the Eurozone. Existing home sales at 10 o'clock. Leading index. This is an important one for the Fed at 10 o'clock. We have a lot of speakers today. ECB's Holtzman, BOC's McCallum and Rogers, BOE's Tenreyo, Fed's Waller, Fed's Mester, Fed's Bowman and Logan, ECB Schnabel, Fed's Bostic. I mean, it's just they're really rolling out the parade with these guys. And then this evening we get the GfK consumer confidence out of Great Britain, and at 7:01 p.m. Eastern, and we have the inflation rate out of Japan, which is really significant this evening as well, in case you're trading. So this is what we're looking at. As far as the stats on the S&P is in a double distribution profile, or also called a multi-distribution profile. Very interesting ledge. We'll look at it in a minute. In the profile for the S&P at 65, highly defended price at 65. It ended up failing in a big way. The volume this morning, 230,000, which is very much in line with our expectations. It's higher than what we've seen over the last few sessions. The range is also higher than what we've seen in the last few overnight sessions at 30.5. The point of control is at 41.47. If you recall yesterday, the low is around 50.50, 41.50.50. So we've kind of pushed through and we're fighting in that mid-century figure of 41.50. There's a wall of options that expire tomorrow in that 41.50 level, so expect it to be quite noisy. So let's just dive into what we've got here. This is the S&P. You can see the volume has been pretty decent, 231,000 up here, and the range at 30.50 right up here. Here's that ledge. See that profile ledge there? This 64, if you recall yesterday, the 64, 65 area was pretty important in terms of our over-under line. Let me see, I might have grabbed it right here. This is from yesterday's video. This is from yesterday's Trader Bite. I talked about 64, 65, expecting that to hold. My primary expectation yesterday was expecting that to hold, and then for us to turn down and battle and beat this 41.50.50 to get the overnight stat and start pushing through 41, 31, 21 to the downside. I was completely wrong on that. Let me see. See, this is what I expected yesterday. The delta was buying up, but I expected it to be responsive and then to finally falter and fall through. There, 41.31 was the expectation. Here's why. But, you know, that's all well and good, but the fact is we didn't do it, and it was wrong. Yesterday, we opened up very tight auction. Very tight auction. We opened up out of range. You could see the prior day's low is right here at 64.50. We consolidated, pushed up there, came back, squeezed again, and then it just wouldn't let go of the 64.65 area right here. And it just kind of squeezed and squeezed. And yesterday is yet another day of just tremendously overlapping bars and just continuous push higher and higher and higher, quite bullish. Every rotation down was bought until the close. We pulled back on the close. We pulled back to the mid exactly, and then held sideways before we settled right there. So we ended up settling again in the 41, 80, 78, 76 area. This area has been, we've settled here quite a bit. Here's the bigger picture view of the S&P. This is RTH only. Every time we sell off, we buy up. Every time we buy up, we sell off. So we buy up, we sell off, and buy up. And then we've been kind of trading quite a bit in this area right here. The market really loves this 41.78 to 41.80 area. But really, we're in a kind of a fuzzy channel. We have a bull trend going, and we're in a fuzzy channel, as you see here. We've poked through the top and the bottom here and there, but overall, it is kind of maintaining itself. And then yesterday, set up value right on top of the prior day. This is the market proving to itself that it's accepting higher prices very, very well. And then this morning we came in and it's sold off. So overall, when we look at the TPO chart, we see that, yes, we broke the one-time framing down yesterday with the open, but yesterday's strength brought us right back into the same close as the prior session and brought us back into equilibrium. So yesterday was a bit of a short squeeze that ended up pushing and holding higher prices. And this morning, here we are opening in a gap again. So we are in a noisy balance range is where we are. I mean, it's just same story for the NASDAQ, same story for the RTY. We're seeing the same thing over and over. The exception, of course, is crude oil. So let's look at the NASDAQ. There's the NASDAQ. We're in it's just compression here. We've got real balance going on in the NQ. And in the Russell, we have pretty, the Russell's sold off a fair amount. We've got in fact, I've got these boxes up on my intraday. Here we go. There's the NASDAQ. This is basically the box. These are the boundaries for the NASDAQ. And here's the box for the Russell. The Russell's been there quite a while. And then crude, however, set up a box, broke it to the upside, set up a new box, tested it from above right there, tested the prior high from above right there, fell back in. This is the imbalance day, sat in this box for a day or so, and then has broken to the downside. Remember, yesterday I talked about 77 being a key target below, and then below that we get into the gap close, which brings us back to about 75, 70 right down here. So this becomes the next area, and that closes the gap zone and fills in this area here. Once it gets down here, I'm expecting that crude is likely to just fill in this area and kind of hold steady. So what we did is we gapped up on the OPEC news to the upside, tested higher, so check on the response to the news. A nice check upwards to see if we can find sellers up there. We found sellers. We came back into range, check, and we've fallen through the range. And so what this is saying is it's not able to maintain those higher prices given the current conditions, and we have a large unauctioned area here, so crude is expected to kind of fill this in over time. That's the main expectation. So again, the ideas behind yesterday's trade didn't work out. I have to go with what's in my chart. Yeah, I'm sure you told me to buy the dip, but frankly and honestly, it's meaningless to tell traders what to do if there's no basis for it, right? So coming in and saying, like I can come in here today and say, sell this. But I'm spending 20, 25 minutes every day going over the narrative and going over the reasons I see it that way. But what the market does and the outcome of the very next trade is 50-50. So it really, as we develop as traders, we start to recognize that there's no point in saying, I told you to buy, you should have bought. So I want to point that out to you as something you might want to consider, that it's not useful. And if you have something that works, you would not be just kind of sharing snippets. You would be talking about why. Without the why, I'm not willing to stake my money on your determination. And nobody else is, so it's not very useful. Okay, just telling you that so you can be consider that and know that that's not how professional traders trade. So here's what we're looking at today. Today, we are down here, and we have another scenario where, yes, we're breaking through this channel, which is really not a channel. It's really a box. It's not a zero-sum game. Oh, man, you're like reciting all the nonsense from the books. It's not a zero-sum game because I make money when somebody's long-term 401k investment loses value for a day. I get to make money, but they get to make money over a 20 or 30-year period. So they made money, I made money. It's not a zero-sum game. It's not a zero-sum game. That's very frustrating to hear that even in 2023. It's not a casino where I have to take your money off the table. You and I can make money while the person who's long the stock can make money while we're short, and we can all make money, and we can all lose money, right? You got to understand the concept that it doesn't work that way. I don't have to take money from everybody's pocket here in order to make money. This is nonsense. It doesn't work that way because we're trading value. We are trading both sides of value, and we're trading from a nanosecond time frame all the way up to multi-year, and there's money to be made and lost within that. So just, again, I'm pointing these things out so that you can reconsider how you're thinking. You don't have to lose money for me to make money. You don't. So, money's made out of nothing. So how could you say it's a zero-sum game when we're constantly printing money? It doesn't work. Anyway, I'll get off that soapbox. Apologize for the diversion, but I just don't like that kind of thinking. I think it's a limiting. These are limiting beliefs. Okay, so where are we? We've gapped just like we did yesterday here. We are still in balance. I have to see. I could draw some lines going up or down or whatever. All I can do with this information today, to be honest with you, is that I have to sit and wait. I don't have a particular lean one way or another, because we could have another day where GEX might indicate that we're still bullish going forward, and you'll have people having to buy and buy and buy, or we could respond back, which is what I expected yesterday, which is what I would normally expect today. Respond back to the prior range, test the prior range, and then move to the balance in this area, down lower in this area at 41.31. So I'm looking for this magnet at 31. There, it says a magnet right there. Looking for this magnet. This is what I was looking for yesterday, by the way, and it did not work that way. It just ran up. So I don't know which way it'll go. I'm sure somebody here is smarter than me and already knows what the market is going to do, which is great. But I have to wait. And so what I do on days like today, because there's so many Fed speakers and so much crap on the news. I mean, look at this thing. This thing is loaded with events on the calendar there. Look at the times. Every hour or half hour, we've got someone saying something. Because of that, I have to lean on my price map. So the price map is 80 up here, 90. Okay, the 90 is the prior week's high. We pushed almost to it yesterday and found some sellers. And then we have this 65 to 63 from yesterday, if you recall. Then we have the 50 mid-century figure, and then we have the 31 magnet. This is the map for today, and how it hits it, where it goes from here, and so on and so forth. I don't know. What I'm going to do today, instead of giving you some lines on a chart, is I'm going to watch how the open operates. I'm going to watch which side has strength, which side pushes and gets delta participation, which side is squeezing. I hope it's not a squeeze like yesterday's. And then we'll see how that goes. The big target down below is the 4100. This big line down here, that ends the weekly one-time framing. It is really the over-under for this zone. That's the big target at 4100 here. If we get down here, if we start to sell off, I expect it to chop and pause at 31. But if it doesn't hold on to those, it's likely to push to 4100. So today we're going to wait to see above us 4204. So there's the price map. I'm going to leave you with a price map as opposed to here's what I expected to do, because we saw yesterday that there was definitely interest in buying on the dip. And we're still going to look at, the 64, 65 as the over-under line going forward, okay? So that's that. Looking at the NQ, This thing is much more sideways than the ES is. The NQ has run up farther than the ES, but it has had a hard time pushing prior weekly highs, which we did in the ES, and it's just completely sitting sideways. So it's quite choppy. I mean, look at this trade in the NQ from 2 days ago. Imagine being active in this absolute sausage-making kind of grind that is from Tuesday. Yesterday we were one-time framing up, pretty nice trend until it came back into equilibrium here at 13,200, and then it kind of chopped around. But overall, the NASDAQ's in a very, very wide balance, and the point of control of that balance is yesterday's settlement. Settled right on top of the point of control at 13,185, and it held there. Today, we're trading down here. The NASDAQ's opening down here. So the question is the same. Do we squeeze up, or do we attempt up and fail down? In which case, I would be looking for the NASDAQ to push to 12,950 and then to see what it does beyond there. Okay? So that's that. Looking at the Russell, same story, completely balanced. The Russell's holding a bit of a trend line here, but completely balanced. The Russell managed to get back into the range, showing a little bit of strength. The Russell has a lot of action up here at the 1814 area. It kind of pushed against it several times here, and it held the settlement at 1810 basically. And then this morning, it's opening in range, unlike the ES and the NQ. It's opening in range, so I would expect there's a higher probability, just statistically speaking, of the Russell squeezing back up now that it's in range. Yesterday did not have any real value. The point of control, however, in the Russell yesterday remained at the low end of the range, which is kind of interesting. For crude, again, the narrative hasn't changed here. We've fallen out of balance to the upside, and we're in this kind of untraded area of the recent past. And so crude is expected to continue to work itself through this gap zone, 77 being key from last year. And I'm expecting it to push down into the 75.70 for a little bit of support down here at the 75.70. I want to remind you that today at 1 o'clock, I'm going to be talking about charting the convergent way. We're going to look at why we use certain charts, what information we gather from them, and how we distill that into actionable trading. We're not going to talk about setups or anything like that, but we're going to talk about how to keep your charts clean and providing the information that you need in the different time frames to trade. And no, I'm not going to block someone who is offering up information. I think that's just not the right way to do it. But I want to make sure I address this idea that we can blurt out trades and reaffirm them the next day. I just want to, we can disagree because I learn from disagreeing. I don't learn from people who agree with me, right? So that's okay. So we don't want to do that. Good luck, everyone. Catch you at the webinar today at 1 o'clock, and which is pinned in the live chat. And then I'll talk to you later on. Take care.